Hey traders, welcome to this week's Staying Sharp with COT Data Insights. I'm Phil Morphs, and in this video, I'll break down the key market setups I'm watching based off the CFTC, positioning data, macro catalyst, and price action. If you're following my newsletter, this will bring it all together visually. Let's get into it. Okay, so for this week, we know that it's the third week of the month, so we have a particular style of how to approach a different market class, especially the indices. We tend to see that there can be very tricky price action on the lower time frame when it comes to intraday trading from Monday to Wednesday. Usually advised to wait till Thursday and the Friday of the third week. And interesting enough, we have the symposium, the Jackson Hole Symposium, right? So that is going to be the main driver for the indices across how Powell makes the tone for his decision regarding rate cut or not. Well, from the positioning of the CFTC data, what do we see? We have been highlighting the fact that we have a very high amount of commitment into the longs by the non-commercials. This remains to be the key. However, interesting enough, this week we had a 6-month all-time high increase in the net short, in the short positioning rather of the commercials. So this makes for a very interesting topping price action, right? And we have an increase in the open interest over 333,000. The last time we had this kind of levels was back in March. If you ignore the June period, which was due to the contract expiry. So this should make for a very interesting bearish case for the indices. However, between NQ and ES, I prefer ES for short positioning. If we look at the way NQ traded last week, from Tuesday close right here, which was the close of the CPI data, we saw how on Wednesday it's a choppy weak candle. Thursday, again, when the PPI released, it was a drastic negative reaction to PPI. And then we had our Friday, which price still failed to make any higher price action. Now, we are not negating the fact that we could have a bullish comeback on Monday, but from Tuesday close, we expect to see bearish pressure to continue on the indices. However, the best price action should be on Thursday and on Friday of this week, and that aligns well with the Jackson Hole Symposium. Okay, next we have the dollar. The dollar has been a very interesting play for us to be in. Since the beginning of this month, August, we have been calling for patience, seeing how bad the non-farm payroll presented. And last week, we went in with the game plan that, wait, the positioning does not actually matter. The fundamental news is more important. And that was the key information for us to use last week, meaning how does the CPI print? How does the PPI print? That's the most important thing. And then retail sales. So, as we can see on Tuesday, we had a bearish CPI print that pushed the dollar lower. On Wednesday, carried on the sentiment. On Thursday, we had a bullish PPI again that pushed the dollar higher for a bullish close. But however, on Friday, the numbers were not strong enough to lift the dollar. So that remains key. Now, on the CFTC data, what do we see? We see the first time that we have an increase in the net positioning and subsequent decrease. We can see from here, it started from 6,000 and decreased all the way to 3,800, and then a spike after a spike which led back to 5,300. So we count that as a new level of interest. However, we start counting from this level again to see if we continue to increase the net positioning or we decrease from that level. So the first time that we decrease from that level tells us that we want to see a counter move. It's just an observation I've been seeing in the data back and forth of how this can influence price. So this is the second week of a consecutive drop from the net positioning, and this should bring about a bearish leaning on price come Tuesday close. And how low this can get is the place of interest for me, where I begin to ask myself, what levels do I want to see? What levels do I not want to see? It's fine if we take out July 24th low. Howbeit, personally, I wouldn't want that. I still would prefer to see how that we consolidate here and at least take the high of Thursday one more time. If we can close above Thursday high, I know we are back for a bullish case, but without doing that, let the bears reign on the dollar for now. And the low from the beginning of this quarter, which was July 1, we want that to remain the case. The moment they take out this low, then all bets are off, right? From this level, if the dollar is so weak enough that we come to take out July 24, we want to see a bullish reversal after this level has been taken. However, we wait and see how Tuesday close presents. Tuesday close, we want to see bearish price action, but it would be great to just see consolidation or even a close above 14th of August, maybe by Thursday, who knows, whatever that might be the case. But for now, any bullish sentiment from here is not a high conviction. We have to wait for the data, and not just the data, the price action to come into alignment with what we see from the CFTC data. Clearly, you can see from the CFTC data that we have this long column here, extremely red, which means that they are massively committed to the longs, while we see on the left hand side here the non-commercials are not interested in the long, but they are not adding on to the short. I mean, we love to see turning points where the non-commercials are taking the opposite side of the commercials, right? So we want to wait again and see whenever they are baited to give us a very interesting price action. Yes, the open interest is low, but this is not sufficient enough to bring about the price action that we're looking for. So we just have to wait and see. Next, we want to think about the yen. So guys, for the yen, I have made an improvement. Instead of we looking at the USD JPY pair chart, I think it's better to just use the futures of the Japanese yen, right? Because based on how I used to calculate the data from the CFTC data, now I just updated it back. I just want to be looking at the yen itself. Then we look for correlated pairs together with the yen. So GBP yen, USD yen, that would be the way to go forward. But we just have to be able to ask ourselves, what is the positioning on the yen, and how is the strength relative to other forex currencies? And for this week, the highlight here is going to be the open interest. Open interest is back to 351,000, which is not far away from 388,000, which was back in June 10. If you look at the charts from June 10, what we saw happened was this was June 10 over here. Upon that week close, the close of that week, we saw that this precipitated downward pressure on the yen. So we think this is also going to continue to be the case, where we want to see how this open interest would facilitate downward pressure on the yen. Now, is it going to be straight away down right now next week? I will not put my bet on that, depending on how we close on Tuesday. So basically, for the past 2 weeks, we've just been consolidating here. There's no hyperability trade here. But from what we can see, we know that we are likely in a zone that would precipitate lower yen prices within the next 1 week, within the next 2 weeks. Let's see how it develops. We have to wait for that confirmation. I wouldn't be surprised if we take out these levels here that I've highlighted here. It will be interesting, and then we roll over, right? That's fine by me. But for now, there is no clear short from here. I wouldn't short this from here. I'd want to see how we take out these highs here, and then we can then roll over on the yen. And the strongest currency pair that we know right now across board continues to be the British pound. And that is why whenever the yen is ready to roll over, we want to be on side with GBP JPY. Take a look at how GBP JPY looks like since the beginning of August, where we continue to be bearish on the yen. Since the beginning of August here, GBP JPY has been a phenomenal trade to be on side on. So this is the power of combining the weakest pair and the strongest pair to give us a better pair to trade off of the idea. Now, when you compare the way this chart looks like from the beginning, from August, from Tuesday 05, compare this to what we see on USD JPY, we can see that if you were bearish on the yen, staying with GBP JPY was the best place to go about it. So I think the moment I have adapted my spreadsheet to look just like the yen, then it gives us a better way of utilizing weakness on the yen, we have to look for the strongest currency to supplement that. So it continues to be the case that we want to see strength in the British pound to continue. Why is this the case? Now we're not making the case that GBP JPY would perform massively against the dollar. Now that could be on the cards, but because we have a bullish leaning on the dollar, I wouldn't outrightly want to be looking for GBP against GUs. That's not my interest. However, what is my interest is the euro versus the British pound. So this is because we continue to see that we have massively moved to the very top of the Euro GBP pair, taking out several key levels, 3 months. I think we took out the November 2023 high. So these are very key levels that we want to see if they can be topping process from there, which we confirmed last week after the rates, the hawkish rate cut in the British pound. So it continues to be the case that we want to see how price should fall from here. So we want to see bullishness of the British pound against the euro. This is due to the fact that we can see very high amount of long commitment by the commercials, steady 2 weeks of positive inflow, and then we can see that for the past 4 weeks the non-commercials have been stacking up on their short on GBP. We are not interested in what the non-commercials are doing when it comes to calling a trend. Rather, they would be faded, because in calling out a major trend, we want to be also with the commercial. So we expect that these orders must be flushed out for us to have a very swift drop between the euro and the British pound. So that continues to be the case of what we are looking for. Tuesday close is key for us to see a reversal. Even from the current chart, what I can see over here, I think a reversal back to Tuesday of last week again. Yeah, I think I want to see some reversal from this point. That's very, very interesting. Let's see if we have a naked close on Tuesday will be good, knowing that on Wednesday we have the CPI. So a hotter than expected CPI British pound, that's bullish the British pound against the euro, and that should be a more safer bet than going for GU directly. Already let's take a look at what the consensus is regarding the GBP CPI number. From here, we can see that the CPI GBP number, the consensus expectation is at 3.7%, so which is an increase from 3.6. So this is very, very this will be a key catalyst. We know that the governor of the GBP is interested in what the inflations are doing, even in the service sector too as well. So that should be interesting for us to watch out for. Lastly, it's going to be on Bitcoin. I have tried to reserve my views on Bitcoin pending when I collect sufficient data, and I think I have sufficient data now to start speaking on this, because it's been behaving as every other asset class that I observe on the CFTC data. So what do we see here on Bitcoin? What is of interest here is, since the 23rd of July, we had a new contract rollover, and we have traded to the lower band of that opening price for the new contract, and then we had a gap here that was filled completely. Now this level here looks to me as a way for price to continue pushing higher. How do we back this up from CFTC data? From the CFTC data from the 29th of July, we begin to see that there was a drastic drop to 28,000. Okay, not a drastic drop, but a drop back to 28,000, and 28,000, 27,000. These are actually the low bound of the open interest. So, when you see this dark reddish zone, it just means it is closer to the lower bottom. The lower bottom if it's in the lower bottom, it's going to be a red column, but this is sufficient enough for us to consider bullish scenario. Also with the fact that we can see a decline in the net position of the commercial. This is a bullish indicator, just as how we can see from June, the 3rd of June. We also call this to, since the 3rd of June, we can see, this is the 3rd of June here. Since the 3rd of June, on the 3rd of June here, we can see that we had a massively bullish positioning in the massively bullish net position by the commercials, and the following weeks we had sustained decline in that net positioning, and that is sufficient enough for us to see, seeing the consecutive drop in the net positioning of the commercials. This was sufficient enough to push price higher, and we expect that this should continue to be the case yet again, because we are several weeks after the peak that was made here, and then we can see that dropping over. Now, to get the best out of the Bitcoin course, you have to be looking for which other cryptocurrency outperform Bitcoin. So start thinking about Ethereum. I'm not be going into that in this video, but just for observation, next week we should begin to see very interesting price action on Bitcoin to continue spiking higher. All right, so that's it for Bitcoin for this week, and the closing note for this video is going to be the fact that be very careful in the third week of the month when trading the indices. Stick to Thursday and Friday for the best price action, and if you want to trade the Forex is fine. That works just well if you're able to align with the fundamental news and the expectation from the CFTC data. All right, so this concludes this week's COT outlook. If you found this helpful, like and subscribe and drop a comment if you are watching any of these setups too. If you want to dive deeper, the full write-up is in my Substack. Link in the description. Stay nimble, stay sharp. See you next week.